So the holiday season is upon us, and we're dashing through the snow in one-horse-driven sleighs, laughing all the way to the bank. Am I right? Well, you will be once you stuff these 3 stocks into your stocking stuffing. Well, you will be once you stuff your stockings with these 3 stocking stuffer stocks. I dare you to say that 5 times fast. In any case, bump that like button for the YouTube algorithm and let's dive in. But before we go any further, you're watching Finance Squared. I'm your host, Derek West, and you can be sure to get more great content on everything personal finance, stocks, business in general, and just living the good life by subscribing and hitting that notification bell. That other bell you hear ringing, that would be a sleigh bell. And yes, that would signify the holiday season is upon us. Oh, that other bell? That would be the opening bell of the New York Stock Exchange, ringing in your mind. What stocks can one pick up during the holiday season that could lead to good tidings and great joy? Well, I can think of 3 of them. But before we get into that, let's go over some fundamentals so you don't get over your skis this holiday season. Are you tired of the winter puns yet? Strap in, buddy. It's not ending anytime soon. First things first, timing the market is never a good thing. So before we really talk about anything, realize that timing the market is just a bad idea in general. Now, it is true. If you do good research on a company and understand the cycles of the stock market and the company and the market that it's operating in, and you understand the real world events in that market that the company is operating in, you can make pretty good money by buying and selling stocks at certain predisposed times. However, most people do not have the time to do the advanced research it takes to truly succeed long term with that approach. And the people that do, people who are paid to execute and time the market in an attempt to beat the indexes that they're competing with, essentially rarely ever beat said indexes. Now, some of them do get close. Some of them do beat those indexes, S&P 500, etc. But most actually never get close at all. And you likely do not have the type of money it takes to get invested with those that do. So timing most investments is typically a bad idea. You want to invest in things you have researched and understand. Now, if you're not going to be timing the market, what do? Well, you do the research and you make sure you understand what you're putting your money into. This applies whether you're timing a specific investment or not, actually. Either way, make sure you understand where your money is going or you'll lose it. And you will have not learned the lesson of why you lost that money, making the whole venture a total net loss. This doesn't just apply to stocks and bonds. It applies to real estate. It applies to index funds and ETFs. It applies to REITs. It applies to opening franchise restaurants. It applies to buying Shopify stores and Amazon FBA businesses. It applies to all sorts of ventures. Do your research. Don't just plop down your money. This isn't the lottery, and if you know what you're doing, you can and you will make real money. Do not invest under duress. Now, this should go without saying, but I have met some folks who will inexplicably invest money that they should be putting to other areas first. Like, for example, their rent or mortgage payments. You should invest with money that you have left over once you have saved a sufficient emergency fund. Or at the very least, at the same time, you're saving up your emergency fund. If you're in deep debt, that is consumer debt. In other words, you owe a ton of money on high interest credit cards, or you have an auto loan that is a large payment or something like that. You should at least be executing a plan to retire that debt as soon as possible. The debt doesn't necessarily have to be erased for you to start investing, but if you don't have a plan in place to get rid of that debt and you're not executing on it, you're putting the sleigh before the reindeer, and you rarely ever get momentum that way. Ask Santa, he knows. Debt repayment doesn't have to be complicated either. I do have some videos coming out in the near future on the debt avalanche versus the debt snowball methods, so make sure you're subscribed to get those when they drop. But once you get involved in either of those methods, then simply continue that momentum by taking the money you use to retire the debt and apply it to your investment strategy. You can accelerate your wealth creation by increasing the amount you invest monthly. That said, that's a topic for another video. I'm gonna resist the temptation to ask you to like and subscribe, I swear. But once you're ready to invest, start out with the simple stuff first. Your foundational investments should be easy to purchase and understand. If you're reading up on how to trade options to get wealthy, save that stuff for later, if at all. Investing doesn't have to be complex. And in reality, investing isn't complex. There are ways to make it complicated, and they exist for very good reasons. But if that is your first type of investment, you're doomed to make big mistakes and frustrate yourself and your investment goals. So start off simple. Maybe mutual funds, index funds, ETFs, possibly REITs. A lot of people's first investment is their home and whatever they have in their 401ks. Frankly, those are great places to start. But once you have your feet under you with those investments, then you have a solid foundation. And then it's time to branch out and try and get those other income streams working to your advantage. Once you have your basic investment started and you have an emergency fund and so on, now it's time to start looking into more advanced investment types and investment options. Things like single stocks, trading currency, either crypto or just plain old currency. There are other more exotic instruments out there, options, derivatives, etc. Each of those advanced investment types needs to be researched thoroughly and understood thoroughly before you venture into them. You can make good money with any of them, but you can definitely lose tons of money if you just go in blindly. So do your research, inform yourself, and then dive in. Now that said, the holiday season is as good a time as any to do research on companies and trends and other things investment related. Like many of us, you likely have some downtime during the holiday season. You're probably reflecting on the year that was and the year that will be. And during that reflection, you, like me, are probably thinking that there are stocks out there that you can and should consider for this holiday season. Whatever could they be? Well, obviously, for the holiday season, you're probably thinking, well, e-commerce stocks, right? Everybody's shopping and buying, so there must be good e-commerce stocks to buy, either brick and mortar or just plain old e-commerce. Well, yes and no. The thing is, most e-commerce stocks are really expensive. That is to say, for the price you pay for them, you may not likely get too much in return. You could buy them and just have them as trophy stocks. I mean, it is the holiday season. I'm sure we'll be getting and giving tons of gifts that will not appreciate much in the coming months and just look good on our shelves. But there are other options. For example, a stock that I'm looking at, Avalar. Avalar is a company which helps small and mid-sized businesses and merchants, online shops mostly. Think Shopify, Wix, Amazon FBA, etc. ad nauseum. But they help these merchants collect sales tax across state and international lines. As you can imagine, this is a huge hassle for smaller sellers that don't want to deal with all the intricacies of sales tax laws in dozens of US states and across international boundaries ad nauseum. In comes Avalara. Like other e-commerce stocks, they're kind of expensive. But unlike the other stocks, they might still have some room to grow. One of the reasons for that is that they don't really have much competition. And as you can imagine, the pandemic has helped to power them to their current position. So, not the worst stock out there. Think about putting them in your Christmas stocking. What other options are out there? Well, there's Walmart. So Walmart has been a juggernaut for decades now, and they're really showing no signs of slowing down. But is there any opportunity for growth with this particular stock, making it worth your while to purchase them? Perhaps, perhaps not. Let's look into it. A shrewd viewer will note that Walmart is close to or above their all-time high, depending on when you're watching this. That same shrewd investor and viewer will also know that companies this large typically can't grow much more. Will it be a good company to just buy and hold? Most certainly. But there's a case to be made for a growth play as well. In Q2 of this year, Walmart's e-commerce sales grew by 97%. An impressive number for sure. And I bet you're wondering, Walmart does e-commerce. Yes, they do. And they're growing at it. Well, I'm sure you're just rolling your eyes and saying to yourself, that's just quarantine-fueled insanity, similar to Target, am I right? Well, let me challenge that notion by noting that they also grew their e-commerce by 74% in the first quarter of 2020, right before all the madness kicked off. Now, this is not the kind of growth that can last forever, certainly, but it definitely can fuel a little more growth in the value of the stock, adding a little extra holiday cheer under your Christmas tree this year. Waste management is next on the list. With holiday shopping, there's obviously going to be holiday wrapping. And no, I'm not talking about Christmas-themed rap music. No, holiday wrapping, that is with paper and gift boxes, which just means extra junk that needs to be managed. And enter waste management. As I'm sure you realize, pandemic or no pandemic, trash disposal is just a great business to be in. Gone are the days where your private trash disposal companies are mobbed up fronts for organized crime. Nope. Waste management and a couple of other companies have cleaned that business up. No pun intended. However, the pandemic has treated this company not so well. Like a lot of companies, frankly, since a good portion of their business is restaurants, offices, and other facilities that have been severely affected by the pandemic, investors have summarily punished their stock offering. The loss in that business has been replaced with gains elsewhere. For example, the delivery-driven economy produces plenty of packaging waste. Shares should surge based on improving earning prospects and otherwise shrewd moves. Their purchase of advanced disposal, another one of those waste management companies we just talked about, just achieved regulatory approval. This deal is going to increase earnings going forward, which should boost the stock price. And there you have it. 3 stocks that you should consider picking up this holiday season. Be sure to like this video if you liked this video, and leave a comment down below with stocks you're thinking of picking up this holiday season and headed into the new year, and why you're thinking about doing it. Also, be sure to subscribe and click that notification bell so you are alerted when we drop more videos. on investing, personal finance, and business. We have videos coming up on investing fundamentals, exotic investment instruments, and so much more. So stay locked in. And remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Take action on your Christmas investments, and I'll catch you next time. Peace.